In this video, we're going to talk about the financial projections. Financial projections are required for pretty much every SBA loan, and especially if there's any kind of growth that you're anticipating. So if it's a startup business or if it's a business that's expanding, so you're looking to buy equipment or a larger piece of larger building that you'll expand your business in, financial projections are definitely required. And then if you're acquiring someone else's business or even buying out a partner, you're going to want financial projections to project what you think you can do with that business. So up at the top, you're going to have company name, and then you're going to have gross receipts. This is your gross sales on a monthly basis, the total over here full year. And then your cost of goods sold. And that is how much it costs you to sell the products in the top one. So for instance, you may sell a toothpick for $3, but it costs you $2, and your gross profit margin would then be $1. So SBA is going to require that you do it on a monthly basis for the first year, and then the second year just can be an annual basis. If you have any questions on how to figure out what your revenues are going to be, you may want to check out the Products and Services Revenue Calculator. That's in another video, and you can also download that form. Okay. Why the SBA wants 12 months is some businesses, well, two reasons. Your business is either growing, so you're going to have fewer sales here, and then it's going to increase as you get to the end of the year and you've built up momentum, or there's seasonality in your business. So you may have a lot of sales in the summer, you may be like close to the ocean or something, and people are coming there to tour, so you're making a ton of money, and then in the winter months, you're not making much money at all. Or just has to do with when contracts are coming in, so you're busier in the spring or whatever the case may be. So this really gives the lender a good idea of what your sales cycle looks like on an annual basis. Okay, down here the expenses are much more easily prepared. So your owner's salary, you're just going to take whatever the owners are going to charge on an annual basis, divide it by 12, and you do the same thing with wages, repairs and maintenance, what your estimate's going to be, rent, taxes, interest. A lot of people leave interest blank because you may not know exactly how much interest you're going to have on a monthly basis. That's perfectly fine. Same thing with depreciation. It's kind of difficult, or a lot of people don't know exactly how much depreciation you're going to have on a monthly basis, so leave that blank if you're not sure. Same with amortization. Okay, advertising. Advertising, you may have a lot of advertising in some point of the year and not so much. Otherwise, just break it out and make it even across the board. Telephone and utilities, auto and truck, all these are fairly easy to estimate, insurance, whatnot. And what you're going to come up with at the end of each month is your total expenses on a monthly basis. So this total expenses are going to be subtracted from your total income, and you will calculate your net income after those expenses. One thing that I forgot to mention up at the top here, you do have this other income. Some businesses, let's say you have a business and you own a building and you're running your business out of the majority of that space. And then you also have a tenant next door of which you're collecting rent. Well, that's not really your main source of income, but it is other income. So you may want to put that rental income here. Or if you get a random insurance settlement or something like that you're expecting, that could be put in other income. So this all carries down, and you get your net income. Up at the top, if you happen to know how much cash you're going to start with at the beginning of the year, you can enter that there, and it will calculate how much cash you're going to have through the year. Don't worry about it if you don't have your cash. You're still going to get a summary of how much cash you're going to be having throughout the year, and it'll show that in the months that your expenses are greater than your revenue, you're going to be negative down here, but we'll see how it washes out, and hopefully you are positive at the end of the year. It's really critical, obviously, to show that you are going to be profitable with your projections. It's amazing how many applicants turn in financial projections saying they want to be conservative and they say they're going to go out of business when you know, because you're actually going into business because you want to be profitable and you know you're going to be profitable. So make it profitable. So just don't shoot yourself in the foot and say you're going to run out of business when you're extremely confident, that you are going to be profitable. At the bottom, write your name and sign, date. One thing, if you're preparing these based on tax returns, there's this little feature over here. You can just put the annual expense and it'll just tell you what your monthly expense is. This is a PDF document, so then you can quickly put these items in here without using a calculator very much. So that is the financial projections form.